What is going on out there, peeps? All right, look, man, I told you guys they're going to try to push the gold and silver market down. I've been watching over the last few days, just really paying attention to what's going on. They tried dumping the market, they tried pumping the market, and still there's very little to no movement on gold and silver, which means it's at a level right now that can be supported. This is great news for gold and silver holders, but I'm going to go over again what some of the experts are talking about that's going to happen. All right, just a quick reminder, we have Pimpy's investment chat. You come here just to talk about investments and investments only. Everything to do with current events and anything political, I will bring you over to this group right here called The Hidden Things in Front of Your Eyes. There is a link for both groups in the description for you to follow. They're free to come and join, so feel free to come over here and join the groups, okay? So, real quick, gold and silver. Here we are. So, what? They dropped gold down today $1.40. That's it. $1.40. Look at the market's up here. Silver is not budging. It continues to creep up little by little. And you're going to hear some interesting things about gold and silver here really quick. So let's get into this, because first we're going to start off with my favorite, Lynette Zhang. That's right. I told you guys if I had Pimpy University, she would be my professor on gold and silver. Let's hear what Lynette has to say.
John J. asks, Lynette has stated many times that the amount of physical gold in the COMEX is a small fraction of contracts sold for that gold. She has said that 62,000 a couple of times. Did she mean 62,000 claims to 1 ounce of gold? Well, the answer is yes. 62,000 claims to 1 ounce of gold, but that was at the Bank for International Settlements that tracks derivative contracts. Now, they changed the accounting laws to make it appear a lot smaller. At the COMEX, actually, that data is more accurate from the debt clock, like I talked about yesterday, because they do track the claims physical. So there's all sorts of different places where you have this paper gold that makes it look like there are many, many multiples of gold than really exist in physical form. In physical form, there's a finite amount, whether it's in the ground or it's above the ground, regardless of whatever that form may be. So yeah, I absolutely did say 62,000 ounces in claims for every 1 physical ounce, but that's not all. It's much worse than that, because that's only the one derivative area, it's true. Futures contracts are also derivatives, but that's held, that data is held at the COMEX, at the London Bullion Market, etc. So it's in addition to that 62,000 ounces I saw with my own eyes at the Bank for International Settlements.
So just talking about claims, everybody now hold silver and stuff like that had sold more ounces than it physically had. And then what they started doing is people that were storing silver there, they were forcing them to sell their silver at the going rate. That's what they were doing. And they're trying to figure out a way to make up some of that ground. But it's not going to happen. You also heard Lynette say what? She said, if you want to see the true value of gold and silver, go to the national debt clock. And I've been showing you guys the national debt clock now on more than one occasion. Right now it says, I think silver is about $3,700 an ounce is its true value. And gold is somewhere around 31, 32 ounces, I think it was. All right, let's get to this next part here. As soon as this really stops, it's really slow today. I don't know what the hell's going on.
So we want to make sure that you can always pay that.
So anyway, she's going to start talking about the way gold and silver, how it's related to everything that's going on here. So give me a second.
Is a little different because it kind of straddles both worlds. The products, the Wall Street products that are created from the physical real estate, like mortgage-backed securities or commercial mortgage-backed securities, those securities would then go in the same camp as the stock and bonds. But this house or any real estate is not going to just evaporate because of a reset. However, as the currency resets, well, there's the opportunity for those that hold gold. Because right now, in terms of fiat, real estate is severely overvalued, gold is severely undervalued. So that'll flip-flop. So that's why part of the strategy probably won't be in bonds.
So hear what she's saying about gold and real estate. Right now, real estate is more valuable than gold. Right now, she said that's not going to stay there. That's going to change.
So we want to make sure that you can always pay.
That should tell you one of the things you would want to know about why you're investing into gold and silver. Okay, let's listen to this next point.
Transferred their way. So what gold really does is it puts you in a position to have that wealth transfer your way. That's what we're going to talk more about. That's what I talk about a lot. That's why that cup formation is so important, because the smart money buys things when they're cheap, and they recognize that opportunity.
So in other words, when it's time to cash in your gold, everything would be much more cheaper if you think about it. And so because of the reset, okay? That's what you're looking for. Because of the reset. And so then when you cash in for whatever the new monetary system is, you would go out and buy the things that you want, like houses and stuff like that.
Okay. And Stefan asks, so will there be a restructuring? There will be. And there will be a reset. Tune in tomorrow. You'll hear more about it. And Stefan asks, in the coming reset, if and when we go digital, how will this affect our pensions? If the stock market crashes, isn't pension money spent on the stock exchange? Yeah, this is a global problem because of the global aging community. So yes, the pensions, and doesn't this make a great excuse for restructuring all of the entitlement, as they refer to it, really, issues like underfunded social security, underfunded pension plans, whether they're multi-employer plans like every firefighters and teachers unions, or they are individual corporate pension plans. It is a great excuse to get out from underneath all of that pension debt. Because for quite some time, a lot of corporations, hey, we were in the good times, they were making lots of money, and they still underfunded their pension plans. And a lot of the rules and the laws were changed to enable them to do it. I've done a number of videos on that. So yeah, I hate to say this, but if you're counting on a pension plan to sustain you through your retirement, I don't even know what to say about that, if you want to know the truth, but I would not be counting on that.
That's scary if you have a pension plan. You see what she's saying? A crash in the economy would be an excuse for them to get out, the cities and unions to get out of paying the pension plans. Claiming that we're going into a new system or whatever it is that we're doing would be a perfect excuse. This is why, look, it's not my job to tell you guys what to do, but this is why people ask me, what did I do? I took all my money out of there and put it into gold and silver. I wasn't lying. Now, this is very interesting. You're going to like this guy because, you're going to hear what he has to say.
I want to begin, first of all, with why gold? Why should we be interested in what is, in effect, just a metal?
It's not just a metal. It is a money of last resort. It's a currency. It has been money for thousands of years, about more than 5,000 years in Egypt and in the Middle East. They were using gold nuggets, a weight. And if you know that most of the currencies in the old time, they used to say, like in Great Britain, they say the pound, which is a weight of silver, a weight of gold. So it has been money for thousands of years. Recently, in the 1980s and 90s, a new theory came out that mathematically we don't need real things, that the dollar becomes now the standard money, the currency for exchanges. But we've seen in 2008 that that failed, and that the dollar collapsed, and in last resort during the crisis, central banks in Basel, through the Bank for International Settlements, started using swaps of gold, and they have increased recently, in which central banks use gold as a support rather than the currency. A famous author, Mr. Bernstein, wrote before 2000 that the system now is based on the dollar, and there is not going to go back to gold. But he also mentioned at the end of his book, in the last chapter, the last paragraphs, something interesting for somebody who was already up close to 100 years, so with life experience. He said, however, if the dollar, the euro collapse, then we'll go back again to gold. Unfortunately, he died in 2008, exactly when the crisis came, and his prediction that he didn't want to believe it's going to happen just happened. The dollar system started collapsing, and gold started again to be the pedestal of the international monetary system.
So did you hear that? He said the guy said we're never going to go back to the gold standard in his book. But at the end of this book, he said, well, wait a minute. There is a scenario in which we will go back to the gold standard. And that is if you see the crashing of the dollar. And that's exactly what happened. It started in 2008, and it has been slowly crashing. He also said that you're seeing central banks around the world stocking up on gold, as well as countries. You know what I mean? So, yeah, we definitely are going back to the gold standard.
Central banks is the most liquid one with ETFs and mutual funds, the most liquid gold that could come as a surprise at last moment to the market. So that's why it is important. It remains in the monetary system as the pedestal of the international monetary system. And now with the dollar collapsing, and that the euro it's not an alternative, and the Chinese yuan is not an alternative, central banks have been starting to move back, sell dollars, and move back into in their international reserves into gold specifically, and more specifically in the 1960s.
So he's saying right now they're getting rid of their dollars. So the SDR basket has the yuan, it has the Japan dollar, the yen, it has all these things, and that's what people used to fall back on. These are your reserves currencies, but the reserve currencies are fiat dollars, and they have lost its power. It has lost any kind of hopes of regaining back into the fiat system. So everybody's moving back into the gold standard is what he's saying.
Okay, do you want to quickly return, if I can, to take a look at the charts? I want to bring this gold chart back up again, as I said, past the 1700 level, and silver has made these enormous gains since the low point that we saw back at $11.30 in March this year. That's 62% gain. Now, what this is a result.
So what happened in March, remember when the stock just fell out? When we got put into quarantine, everything dropped. Now, this is unique because usually when a stock market crashes, you don't see the same thing happen to silver and gold. It should be the opposite direction. But watch what he says about the recovery, and pay attention to what he says about silver.
In is this gold to silver ratio fall. We had this chart here that we've got here goes back to the highs that we saw on the 15th of March, just shy of 130. Now it's only 95 times. In other words, the price of gold and the price of silver related to each other is 95 times.
So in case you haven't figured out what he's talking about this silver to gold ratio. In other words, it takes 95 pieces of silver to equal 1 piece of gold. That gap has closed. Just about a couple weeks ago, it was 100 to 1 ounces of silver in order to equal 1 ounce of gold. Traditionally and historically, the ratio is 15 ounces of silver for 1 of gold. So we're starting to see the gap close.
Just what does this mean? Why should we be interested in the gold to silver ratio?
The gold to silver ratio is used by traders who do kinds of hedging their positions between two. You can do it with four metals. You can add platinum and palladium. So that's why it is actually used. It's also because historically for thousands of years, going 10,000 years, the three metals that were currencies was gold, silver, and copper. People ignore copper, but the three of them work together for thousands of years. They have been identified as money in throughout history. So what comes is that we are still looking at the relation between gold and silver. And as I mentioned earlier, in a monetary crisis period, silver increases its demand as money, as a currency. It abandons its industrial aspect, and the demand for it as an investment, we call it in North America, but it's incorrect. It is monetary demand increases. So if gold starts moving up because of the monetary crisis, silver will follow right away. Right now, people don't believe yet in this collapse of reset, not necessarily collapse, but reset of the international monetary system. But once gold gives the trigger, which I think it's when gold crosses in US dollars above 1920, which is the all-time high.
Do you hear what he's saying? Remember I was saying once gold got to 1900, it's going to take off. Lynette Zhang said once it hits 1900, it's going to take off. This guy's saying when it passes $1,920, gold is going to take off.
Historic all-time high. When gold crosses that level, what will happen is that silver will start moving up at an accelerating speed, overtaking gold and decrease.
Did you hear that? Silver will go up faster than gold and then overtaking gold. That is crazy. I've talked about that before because silver has a lot more uses and is a lot more scarce. Here we go.
They stay the same towards each other with small fluctuations in demand and supply. What goes down is fiat currencies like the dollar, the euro, the yen, the yuan, all the fiat currencies. And the debt amount is what will push a devaluation, not just of the dollar, but all the fiat currencies around the world. And that will bring them in fiat currencies to a level of 10,000, maybe even more than 10,000. So that's what we need.
He's talking about what Trump said, something about a level playing field. Remember that? A currency reset, a global currency reset. So he's talking about a currency reset as well as a gold and silver reset. There's too much currency out there. Trump is purposely pumping out trillions and trillions of dollars to devalue the U.S. dollar. Eventually, what's going to happen is they're going to have to raise the rate of gold and silver to equal the amount of dollars that has been pushed out there. That is going to be a huge push. It is in the red today, but trust me, it's only down $1.40. It's still sustaining around $1,800. $1,800. It's being supported there. That's what I want to watch. That's what I like. It keeps bouncing around between $1,800 and $1,820. This is a strong support. Silver, same thing. Keeps bouncing around where it's at between $19 an ounce to, $19.20. We'll see it up there, bounces around. These are strong supportive. Even though the market keeps going up and down like a yo-yo, they don't seem to be budging very much at all. This is a sustainable rate. This is one of the levels we wanted to break through. I'm keeping an eye on gold because, like I said, once it hits $1,900, in my opinion, I think it's going to shoot like a bat out of hell. And right behind it, and soon to catch it, in my opinion, is going to be silver. So when everybody asks me, which one are you buying, Pimpy? Silver, man. First of all, it's affordable, and I can get a lot more of it. All right. So again, these are just my opinions and my opinions only, but it's based on listening to what other experts are saying, as well as just using common sense and checking out the trends throughout history. All right. I just wanted to share this with you guys to talk about gold and silver, just to keep it kind of on your mind. All right. All right, if you guys like the video, hit the thumbs up. If you are not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. I'll catch you later.